JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 31st of July. So yep guys, welcome everyone. Welcome to this last trading day of this week and the last trading day of this month as well. So yep, I hope you had a wonderful month guys, everyone. So yep, so I hope it didn't really disappoint you, or say much, or I mean in the opposite way. I mean maybe it made you even better financially. So yeah, guys. As always, before we start jumping into the charts, let's quickly have a read through our risk disclaimer. So. Yep, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, guys, a few seconds for you to read the rest, and we can continue. Okay, so now then, just before we jump into the charts, as always, let's quickly have a, quick mentioning actually of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, let's have a look at what's happening here globally in terms of the coronavirus. Now, as you can see, unfortunately, the figure continues to rise. And this week, yesterday, as you know, yesterday and the day before yesterday, and so on Wednesday and Thursday, we didn't have the videos, neither Traders Espresso nor Tea Time, and wasn't really, couldn't really review all this. So I mean, I hope you were keeping an eye on it, and as you can see, on Wednesday we kind of had a bit of a downer, and well, I mean, we did have a bit of a bad day in terms of the infection. So I mean, that surged, but I mean, hopefully this can get back to normal. The figure here currently sits near the 17,300,000, but some other sources suggest that it's a little bit more, around 17.5 million. So again, we'll continue monitoring the situation, and we'll see what to kind of potentially expect from the markets in relation to the coronavirus. Now, first, of course, the first one I wanna touch on here is the Nikkei 225. So the index drifted heavily to the downside, today. As you can see, it lost around 2.8%, well, I mean, this way kind of ending the month not in a very good position. As you can see, this is the monthly chart, and you can see we had a bit of a a bit of disappointment here for the buyers, for the bulls, and yep, it did drift lower. However, looking at this monthly picture, by the way, on the Nikkei 225, you can see that yes, it drifted lower. However, this could be seen as a temporary correction, because as you can see, we are still trading nicely above the 21-day EMA on the monthly chart, so that's kind of a positive. You can see that the index is still kind of has only, let's put it this way, has only retraced only a small piece of this nice rally that we saw here from the from March time. And if we actually draw a Fibonacci retracement, let's have a look where this currently sits at. So you can see that, for example, we didn't even retrace the 23.6% on the Fibonacci if we look at this monthly chart. So basically, this rally that we had here from around mid-March, the index did decline this month, but like I said, it didn't even reach the 23.6. So basically, it still could drift a little bit lower here, test the 23.6% retracement of the Fibonacci here, coincide which almost coincides here with the 21-day EMA. Find support here, and if the bulls have enough steam to kind of drive this one back to the upside, then yep, that's wonderful. We could see another uprise. So basically, let me just get rid of this Fibonacci, but something for you guys to keep in mind. So don't probably the bulls, like I said, should not get disappointed too much. Looking at this daily chart, you can see that the index drifted lower, but it remained above its 200-day EMA, so which also could be seen as a positive. Yeah, for now, basically, we're just going to be very careful. In a way, this 21,530 territory that I spoke about previously, by the way, that was the one of my targets here, when I was saying previously that if this barrier here, the 22,285 level, gets broken, then this is going to be my main target, because that's the low of the 15th of June, or in other words, the lowest point of June. Here, this level also coincides with that 23.6% retracement on the Fibonacci if we look at the monthly chart. So yeah, again, guys, for now, keep your eyes on this one. Like I said, not all is lost here for the bulls still. However, if this gets broken, then, well, maybe a bit of further declines could be possible. But again, we would need to see a daily close below this area before considering, let's say, larger extensions to the downside. So for now, the little idea that that I'm going to keep in mind here, and I'll suggest you to kind of keep in mind as well, is this potential kind of possible rebound from somewhere around here. But again, for now, like I said, keep your eyes on this, and keep your eyes on this level here, the lowest point of June, near the 21,530 territory. Now, looking at the Shanghai Composite, and now with this index, I talked about this one in the beginning of this week, and I was telling you guys that don't kind of really, the bears should not probably get their hopes up too early, because as you can see, this is exactly the idea that I was talking about, and this is where we saw a bit of a rebound, a nice rebound here from this key support zone near the 3,181 zone, and but what I was saying, that even if we get a nice rebound, keep your eyes on this little short-term downside resistance line taken from the high of the 14th of July. Now, of course, according to all the TA rules, such patterns, because it seems to be forming a nice descending triangle, such patterns tend to break to the downside. However, we're not going to really examine lower levels until we get that break here below that 3,181 zone, and ideally a daily close could do the trick for more sellers. But again, for now, guys, all eyes are on this downside line, because if it fails to provide resistance, then yep, higher levels could be met. But as I mentioned before, in order to kind of aim for some higher levels, let me just quickly grab this arrow, we would prefer to wait for a push above this barrier, 3,336 zone. As you can see, previously it acted as a fantastic area of resistance, then also support, and also as a nice resistance back here in March of 2018. And let me just quickly put this one on the chart. There we go. So that's the highest point of March 2018. So a nice good push above that. The 3,336 territory could do the trick for more buyers. Now, jumping into the German DAX, quick update here. So the index yesterday sold off. It closed heavily in the red. What I was saying previously, if you remember, in the beginning of this week, I was telling you guys to keep a close eye on this level right here, the 12,773 territory, and look at how well this all played out. We saw a nice decline here. Initially, this area was providing decent support together with the 21-day EMA, but yesterday it opened with a gap to the downside and continued sliding. My next target was the 12,416 territory, which is the low of the 10th of July, which also we managed to reach. So that's wonderful. We all even actually managed to close below it. Now, if we take a look at the cash index and where it's currently trading at, let me just grab my chart. We can see that the price is currently slightly below the 12,400 zone, near the 12,377 zone. So basically, we're still below this barrier. So of course, this comes in line with this idea of seeing a further decline towards the 11,000 maybe, or initially, of course, the psychological 12,000 territory. But slightly below that, we do have the 11,957 zone. Marked by the low the 25th of June. So keep your eyes on that one. Again, slightly above that, we do have this 200-day EMA together with the 100-day EMA, together with that psychological 12,000 territory. So all this kind of could provide very decent support. This level here, the 11,557, could be seen just that extra kind of support if in case the index overshoots this key area of support near the 12,000 territory. So again, something for you to keep in mind, but again, for now, it's kind of a tricky one here on the German DAX, but in a similar fashion with the similar story with Nikkei, although yes, we could see a bit more declines, probably don't rush into those kind of sells yet, because again, if this area does provide decent support, then we could see a nice rebound, and this move lower could have been just seen as a temporary correction. So again, be very careful with those lower levels. Yes, we could be aiming right now for some of them, but like I said, be very careful, because for now it could be that this move lower could be seen as a temporary correction, but again, we'll get to that point. For now, from the very short-term perspective, there is still a possibility for this one to move lower. Now gold is popping, well, at least trying to make its way higher again. As you can see, this week, after reaching the all-time high near the 1981 zone, it kind of struggled in the past 2 days. It kind of struggled to overcome that barrier. Even yesterday it drifted lower. However, it didn't really drop below this 1944 territory that I kept talking about. This was the high of Monday, and this area continued to provide decent support. And today we're seeing, this morning, we're already seeing a nice push higher. However, as I mentioned before, a break of this 1981 territory would be required in order to aim for some higher levels, because such a move would confirm a forthcoming higher high, guys. So that's why be very careful for now, and wait for that confirmation break, because if we do get a push above the 1981, then maybe, just maybe, we'll hit that psychological and long-awaited 2000 mark. But again, let's be very careful for now. In case this suddenly starts dropping back below the 1944 territory, and we see, let's say, a daily close below this area, then maybe we'll go for a bit of a correction here to the downside towards this upside support line taken from the low, the 20th of March. So keep your eyes on that one. Now, Bitcoin Cash is moving nicely to the upside together with the other cryptos. So yep, that's wonderful, I would say. I mean, great news for the crypto bulls, but crypto enthusiasts. Yeah, we've managed to break this upper side of the range, so that's great news. So which was around the 280.50 zone. So that's wonderful. And we can see that the even though yesterday we had a bit of a decline, it's still, this area provided decent support. So in a way, we can kind of keep an eye on that one, and we can continue monitoring this level and continue kind of taking it as a good area of support, because if it does that, then yes, of course, it is a good plateau for the crypto to kind of rebound and push higher. Now, the next target here that I'm going to be aiming for is going to be this high, the highest point of March of this year, and that's near the 350. Let's round it up towards the 353 level. So basically, as long as the balance is above this 280.50 territory, then yes, there is a good chance for this crypto kind of to travel towards the 353 zone. In case this suddenly starts dropping back below this this upper bound of the range, then well, maybe we could see a bit of a correction here to the downside. But again, for now, this seems to be that idea is slightly off the table. Now, US dollar against the Swiss franc, and this is working out nicely. So this week, I talked in the beginning of this week, I was telling you guys to keep a close eye on this lowest point of March here near the 0.9184. We managed to break that one nicely, and we managed to close below it. And you can see that on Wednesday and Thursday, when unfortunately I wasn't able to run my videos, you can see that it can decline further. And in the beginning of this week, I was telling you guys to keep a close eye on this barrier right here, the 0.9073 territory. And let me just refresh your memory on what that level was. we need to go scroll back here into history, and that's basically the lowest point of May of 2015. Yep, this is where a current holdup is occurring. Of course, for now, the big question here is, will it stay below it? But to be honest, looking at this picture, it seems that there is or should I say, there could be a possibility maybe to see a bit of a rebound here. However, we'd need to see this daily candle kind of staying above the 0.9073 territory in order to kind of consider, like I said, this idea of a potential rebound. For now, it's very close here. The only thing we can do right now is probably wait. GBPNZD, another interesting pair that I've mentioned this week, and a push above the 1.9322 territory opened the door towards higher levels, and this is what I was talking about previously when I was covering this pair, and it reached my target here near the 1.9638 zone marked by the high of the 12th of June, so that's wonderful. So yep, as you can see, this area did provide decent resistance, although yesterday, for example, we overshot it a little bit here. The pair found resistance near the 100-day EMA and then drifted back down and actually fell also back below this area, back below this this June the 12th of June high near the 1.9638. This morning, we already did have a test of this area, but the pair kind of failed to move further above it. So again, what we can say right now is that if we finally get that strong move above this barrier, then yes, we could aim for some higher levels. But again, for now, don't forget that we may see a bit of a correction here as well, especially if the rate continues to balance below this 1.9638 zone. So something for you guys to keep in mind. And in terms of the downside, to let's say aim for some lower levels here, well, previously I looked at this level here as a good barrier, the resistance barrier, which if we would have gone, oh well, if it gets broken, then yeah, higher levels could be met. You can see that this is exactly what happened, but now this area could play the role of support. This 1.9322 zone. So as you drop below it, could place the rate back below the 21-day EMA, and maybe more sellers could see this as a good opportunity to step in. Now, GBPUSD, guys, this one is in rally mode, and this is what I talked about previously. Now, previously what I was saying, that if this barrier here, the 1.2813 zone, which is the highest point of June, if that barrier would have continued to provide resistance, then we might have seen a bit of a correction here. But as you can see, it was broken. The daily candle kind of stayed heavily nicely above this area, and yep, this is the result that we had, and it continued to rally. So everything's kind of working out in line with the idea that I mentioned previously. And the next my next target is the 1.32 zone. So this is what I've talked about previously, that if this barrier gets broken, then keep your eyes on the highest point of March near the 1.32 zone. For now, this is what I'm going to be aiming for here. I'll see how it performs around here later, but if it gets a hold up here, then yep, a bit of a correction here to the downside could be possible. Yeah, guys, for now it is looking quite positive. So let's see if it can reach this 1.32 territory today. Now jumping into euro against the Turkish lira, now something that I've talked about in the beginning of this week, because look how strongly we have rallied here. And well, basically this week the euro TRY is kind of hitting records. It overcame the high of Monday near the 8.2046 zone. So yep, that's yep, this is what I was talking about previously, that if this barrier gets overshot, then, and if we see the daily candle kind of staying above it, then yep, higher levels could be met. At the moment, unfortunately, it's very difficult to kind of foresee where exactly it could go, because all this is just uncharted territory for this pair. But in case this suddenly starts falling back below the 8.2050 territory right here somewhere, which is the Monday's high, then maybe we could see a bit of a correction here to the downside, guys. But again, correction because we're still trading above this upside support line taken from the low of the 5th of March. So keep your eyes on that one. And finally, EURUSD. So this pair managed to reach my target, the one that I talked about on Tuesday. The 1.1815 level, I was telling you guys to keep a close eye on this one. We've managed to reach that yesterday, and we managed to also overshoot it. Wonderful rebound from this little area right here, the 1.1725. This is what I was talking about. It continued to rally, and today, this morning, it continues to rally as well. So basically, if we scroll back here and try to find another potential area of resistance, the one that stands out here probably the most for now is this high, the high of the not the 15th of May, but let me just grab this one, the 14th, if I'm yes, the 14th of May of 2018, guys. So that's roughly near the 1.1996 zone. Of course, slightly above that, we do have that psychological 1.20 territory, which also could get tested. But again, for now, looking at this strong rally here, yes, of course, all this is possible still. But don't get me wrong, at some point we will have a bit of a correction here. For now, we did have already a decent rally. Maybe depending on how today's trading will end, maybe we could see a bit of correction, not today, but maybe going into next week. But again, for now, like I said, guys, everything's looking quite positive. So let's see if this pair won't, or should I say, will reach the psychological 120 territory. Would be quite interesting to see if that happens today. Then yeah, like I said, definitely, well, not, I wouldn't use it word definitely, but maybe, just maybe, we could see a bit of a correction here to the downside going into next week. But for now, I would say it's a bit of a tricky one. Probably the suggestion here would be to kind of stay away for now, just to see if we can get that correction at some point, and then maybe see if we can squeeze something out of this. But for now, it did have a strong rally. Now the big question here is, like I said, where will it find that resistance? If you're already in the trade, or still holding the position here somewhere, then you could keep it for now. But in case this suddenly starts falling back below the 1.1815 territory, somewhere around here, then maybe we could see a bit of a correction here, a larger correction to the downside. But this is where probably the reversal could come, the short-term reversal could come, of course. But again, for now, like I said, it is just one-way traffic, so let's see if we can reach that psychological 120 territory. So guys, I really hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my traders, tea time is always 13:15 GMT time. We'll have a look at some of these instruments, some new ones, and yeah, we'll take it from there. So thank you very much, everyone, and have a wonderful, wonderful trading day. Stay safe. Thank you very much, and bye-bye.